Very good morning, good afternoon, and good evening for all those who are watching this video. This is Sinu Shivkumar from Yuva India Securities. Let us make your expenditure an investment. With that being said, I hope you have watched last video about managing your trading journal very well. In this video, you are going to understand this 25 rules of trading success. This is not created by me, it is created by Douglas S. Seletsky, and I resonate with him over these 25 rules which I have experienced in my trading journey, and in front of you I am putting it my experience as well so that you can learn as much as possible from this video. Let us get into this video. This module, let us call it Mistakes Are My Mentors and Rules for Successful Trading. Let us get into this first rule about your mind. Your mind is going to be your complete tool. People says that 90% of the mind and 10% of the skill is important for your trading success, and I believe the same. And let us say that 100% you have to prepare your mind very well for entering into the market or exiting from the market, or whatever the decisions which you are going to make, it's completely going to take responsibility of your actions by your mind. So the first pillar is your mind. Next pillar is your mechanics. Which trading platform you are going to use, or what trading platform you understood very well. If you are using Angel One, and what are the features of Angel One, how you are going to place an order, how you are going to exit from that trade, how you are going to keep a stop loss order, how you are going to trail the stop loss, how you are going to manage the entire system of trading platform, you have to understand it very thoroughly, because even after making a small minute trading error can make you or cost you a loss amount of biggest one. So make sure you are understanding the mechanics very well and master this pillar. It is going to help your trading journey. Have a look at these points as well. Keep a pause, and each pointers you can just keep it a pause and make a note if you want it, or you can take a screenshot and keep it for yourself. The third important factor is discipline. How you are going to make any entry or exit. What is your strategy? How you are going to exit the strategy? What is your plan B, C, D, whatever you have? Or how you are going to execute your plan, if what is your contingency. So these many things you have to be very disciplined. It is not one day activity. Throughout the trading career you have to be disciplined. So make out this 25 pointers and read out every day in and out, so that you understand and you be disciplined trader. Let us get into the first rule. The market pays you to be disciplined. If you are disciplined, market will deliver to you more profits and take out only less money. If you are not disciplined, then market will take out your money. So this is going to be the simple rule: disciplined equal to the increased profit. Let us look into the pointers as well. Be disciplined in every trade and market will reward you. But don't claim to be disciplined if you are not 100% of the time. So make sure that 10 out of 1 trade, that one losing trade or undisciplined trade can turn you into a loser or turn you into a negative P&L. So make sure you are disciplined throughout your trading journey, and let us see an example of how you can be a disciplined trader. Always lower your trade size when you are trading poorly. If you are trading 10 quantities, if you are trading 20 quantities, or if you are trading 1 lot or 2 lot, if you are trading poorly, make sure that at least you are reducing by 50% or 1/3 or 1/4, even you can do that. Once you regain your momentum, you can come back to your original position. Make yourself trade with the complete confidence once you regain that momentum. So let us look into the pointers as well. Never turn a winner into a loser. We have all violated this rule, isn't it? So make sure this factor is going to tap into your greed factor. So let's say you have entered at 100 rupees. From this moment, market has rewarded you with 5 points. Let's say you are in the positive trade. From that moment, your greed is tapping and saying that Sinu, this is going to be in a much more winner or larger winner. It is going to print a large winner. So don't do that. Once your greed is tapping, just exit that position. From that moment, if it is giving you a re-entry, try to re-enter, or you just keep a trailing stop loss habit. Either way you can do it. So let us look at this pointers as well, what Douglas is saying. There is no need to be greedy, it's only one trade. You will make many more trades throughout your trading journey. Your biggest loser can't exceed your biggest winner. Let us understand this message from our trading journal itself. So here we have a classic example of, let's say you have a win ratio of 39%, loss ratio of 60%. Your loss ratio is more than your win ratio, but even after making 60% of your traders are losers, you are gaining an ROI of positive 10.73%. How possible is it? Let us understand the basics. So here, managing your total trade value equal. First rule number one, managing your total capital and trading capital equal, and managing your quantity equal. By doing these just 3 steps, you are able to manage your maximum loss, exit with your risk reward ratio of 1:2 or 1:3, whatever you are keeping, and just follow the simple rule. By even after loss ratio is 60%, you will be in a profit of, let's say, 10%. Let us consider the fact that 50% of your trades are going to be in a profit ratio. Let us see an example of that. So previous example, we have seen that, let's say you had a win ratio and loss ratio were varying. Here you have an example of 50% of your win ratio as well as 50% of your loss ratio. Even maintaining just by 50%, you are in a profit of 37.59%. So understand this logic about money management, quantity management, loss management, and your biggest loser can't exceed your biggest winner. Let us go through the pointers as well. Develop a methodology and stick with it. Don't change it from day 1 to day 3 or day 5 and day 8. Don't change it, because you might watch a wonderful strategy from somebody else and you start implementing the same, but it is not going to work out, because there is no holy grail in this business of stock market. What you can work out is something only you can work out, because your trading psychology will be different than others. You might be a fast thinker, you might be a slow-paced learner, you might be a conservative thinker. According to that, develop a strategy. Whatever the strategy is, stick with it, understand it, just manage the trades, just understand and manage your positions very well. And according to that, you will identify your strength. From that point, you can accelerate your trading journal into successful one. So understand this pointers as well. From that, take a notes or understand your trading psychology. Accordingly, you develop your plan. Be yourself. Don't try to be someone else, because I have seen people trading so much lot, so much quantities with so much capital, but that is not going to work for you, isn't it? So when I have begun my trading journal, let's say starting from all the way from 100 quantities to I have just jumped to 25 quantities, as much as capital I have, then all of a sudden, if that position is going to be on not in your favor, then you are going to lose that trade very heavily. So trade with whatever you can afford to lose. That's what the first and foremost thumb rule is all about. So let us look into the pointers as well. You always want to be able to come back and play the next day. What is it? Say, let's say whatever the capital you have, previously in the trading journal we have seen that only 5% of the capital is deployed in any trade, any given trade. So understand the fact, whatever the trading capital or in a single trade which you are going to do, you have a chance to lose the entire capital which is deployed in a single trade. So make sure at least if you are hitting a, let's say, keep a percentage for yourself. If you are hitting that percentage, call it a day off and go for your work rather than trading for the particular day. Come back next day charged up, understand, analyze the trade, what has happened. So when next time when you are entering into the trade, you can manage the trade very well. So let us look into this pointers as well. You can always come back tomorrow. Earn the right to trade bigger, because once you earn the right to trade bigger from 10 quantities to 20 quantities, from that 20 quantities you can move up to 30, 40, 50, or one lot to 2 or 3 or 4 or 10 or 100. You earn that right to trade bigger. If you are earning that right, which means at least plot for 10 days or at least plot for 25 days, at least plot for 1 month, then increase your capital. That's how you will manage your psychology very well. Get out of your losers as much as possible, as much as quickly, because trading your losers or handling a losing position means you are not a loser, but holding it for longer and waiting for completely exit the position, then you are a loser. So manage or assume the fact that, let's say from the moment you enter the trade, it can go as a winner, it can go as a cost, it can go as a profitable trade. You consider the 3 facts, understand these 3, and accordingly you manage that trade. First loss is the best loss. You might had the same gut feeling ever you have traded. Once you see a losing trade, you will understand the fact, or your gut will say that, Sinu, this trade is not going go longer in your favorable position, and accept the fact and cut out of your losers and get out immediately. Poor traders, or when I have been trading in the beginning, I used to say that no, this is going to come back and hit my cover all my losers. No, this is not going to happen. So manage your trade very well. Don't hope and pray. If you do, you will lose. We all have done this, isn't it, in the beginning stage. Let's say we believe that from this point we have entered, from this point if the market is going, let's say just 2 points down, and from here it is going sideways, we will hope and pray that this will bounce back and reverse and get into a profitable trader, and it is going to end in a negative PNL. So don't hope and pray. If you are doing in the trading, just time to exit, because whatever the time and energy you are spending in that market waiting for it is getting bounced back, it has never happened. Either you can keep no trades, or you can enter an opposite trade, or just wait for the right entry and wait for the right momentum to begin with, then you can enter the trades. That's what I believe. Don't worry about the news, it is history. Market participants and price action will perceive the news before it appears in online media or publics or television channel. Make sure you are not waiting for any news to come up and waiting for a holy grail to happen. Market will already reacted in that news. So you don't want to be a latecomer, isn't it? So look out this what Douglas is also saying about newses. Don't be a speculator. If you do, you will lose. If you speculate every time, let's say you are speculating from here, this is going to happen, this is going to happen, if this is going to happen, sometimes it happens, sometimes it's not going to happen. But understand the fact, make results and make decisions based on what you are perceiving or what the candles are saying, what the price action is saying. Accordingly, make your decisions, because it's unchangeable, right? You cannot speculate and keep it rigid target or keep it rigid stop loss. You may always want to, manage your trade, enter into that trade and manage very well. You want to be a speculator or a trader. Understand yourself what is the difference between that. Have a look at the pointers what Douglas is also saying and make a note of these pointers. This is going to help you ever in your trading journey. Love to lose money. He is crazy, isn't it? Saying that love to lose money, because in this parameter you always want to make your losses very minimal, because once you start losing money, then only you can be a good trader, then only you can print large winners, then only you can make consistent returns. So make yourself available to take out the losses and love to lose money, because in this business 50% of the time even we are losing, you are in a profit. 70% of the time, sometimes even if you are losing, you are in a profit. So understand this logic and get out of your losses very quickly. If your trade is not going in anywhere in the given time frame, it is time to exit. Let us assume that instead of entering into 9:30 into a trade, you have just skipped it and you have entered by 10 or 10:30 or 11 or whatever the time it might be. But that is the moment huge consolidation phase is happening, isn't it? From that point, consolidation point, it can go in favorable position or in a wrong side. So what you have to do is get out and let the market heat up, then you can place your order. Because wasting or watching that complete time might be 2 hours, might be 3 hours. So make sure this time is spent for any of your other activities and manage this trade if you want to be successful. So he is also saying the fact that theory of capital flow, you can just go through the pointers and make a note. Never ever take a big loss. Only big loss can hurt you. Once you enter into a trade, 4 things can happen. One is you can print a small winner. Other one is you can print a small loser. These 2 things happens many of the time. If you are printing a large winner, it is well and good. It happens only once in a while. If you are printing a large loser, this is going to eat up all your small losers as well as all your small gainers as well. So make sure you are not printing large losers. By doing this itself, you can make at least be in the 50% of the traders and keep that edge yourself. So let us look at the pointers, review the rule number 5, review the rule number 8, review the rule number 10, 11 and 15, and then you will not violate this rule number 17. Make a little bit every day. Dig your ditches, don't fill in them. So let's assume you are just going for fishing in the sea, and you want just 1 mug of water every time when you go for a fishing. Then you will take that 1 mug of water and come back home very charmingly, saying that you have achieved that 1 mug. But if you aim for more than what is your capability, then you are going to end up losing yourself itself. So I just resonate this story all of a sudden, and I have just explained to you. Make sure you just take little bit every day. Dig your ditches, don't fill in them. That's what Douglas is also saying. Just read out all these pointers and make a note of yourself. Hit singles. Don't try to hit all the balls into boundaries, because if you be like Sehwag and hit like all the balls and print large winners, you will not be succeeded in the stock market business. Because if you are able to manage, just print small winners and accumulate and compound it over the time, you can be a successful trader, investor in the market. That's what 95% of the people losing money in the market, and only 5% of successful people making money in the market. So Douglas is also saying the same thing. Have just converted into, let's say, instead of baseball into cricket. That's it. Consistency builds confidence. This factor you know very well. So every day if you are turning on your PC saying that today I am going to make just this much and exiting the trade very well. If you are able to do that for over a period of time, consider 6 months, 1 year, you will get the confidence of doing the same for next day itself. Correct. So make sure you are reading all these 25 rules every day, and this is going to help you understand what the trading psychology is all about and build that consistency. Then that consistency, stand on the consistency and build the confidence. That is going to give you a 100% success formula for this holy grail of making money in the stock market. Let us do that and read also this pointers and rule number 18 and 19. Remember rule number 9, if you make little bit every day, then you have earned the right to trade bigger, then your profit will increase, then automatically your consistency over the control will also increase. Let us understand the fact and trade accordingly. Learn to ride your winners very well, because after managing these many rules, now you have come to a point of managing your winners. You might have seen that you will book the profit from this point to this point. From that point, market will rally hugely. So you will feel the fact that, oh, I missed that rally. But don't do that every time. But you will understand the fact, once you maintain your consistency, you will understand the fact that how to ride your winners very quickly. What Douglas is also saying, that net effect of scaling out your winners will be an increased average win per trade. While keeping the trading journal, once you understand your strength, which trade you are making huge profits, then from that data you can derive which is your winning trade, then add on to the position if you want to, or just manage that position according to the winner it is running. So now you are essentially playing the house of money. So once you manage and able to do all this below rules, then only come to ride your winners rightly. Make the same type of trade again and again and be a bricklayer. You have seen someone who's working on the same project for so many hours, same work for so many years, same thing for so many days. So what they are doing is they are becoming a bricklayer, isn't it? So make yourself understand and manage your trade log very well. Keep a trading journal with all the screenshot if it is required. I would consider you to enter the screenshots as well from the beginning. Let's say entry point, exit point, what was the market opening point, and what is the market ending point. So by doing these 4 things, you will be able to understand which is your strength, and accordingly you can make the same type of trades again and again. So make this practice of being a bricklayer and review the rules of 6 and rule number 20 day by day, week after week. You will become a bricklayer trader. That's what is the success formula is all about. Now something important and interesting factors: don't overanalyze, don't procrastinate, don't hesitate. If you do, you are going to lose. Because when I have begun my trading journey, I have also did that I will wait for this moment to happen or this to break, and then only I will enter the market. Because if I do that, I will be right sometimes, but I will be waiting for that same trade again and again, but automatically what happens? It won't happen in your favorable way. So what you have to do is just enter into trade and manage the trade very well. It doesn't mean that any trade randomly you can go and enter. You have planned your trade and enter that trade and manage your trade very well. This is how you can be a winner than a loser. Let us also understand what Douglas is also saying. We don't get paid in this business until and unless we put the trade on. So enter into that trade with the plan, whatever you have, manage that trade. If you are wrong, get out. If you are right, manage it very well. This is how you can be a successful trader. All traders are created equal in the eyes of the market. Let us say we all start from the day 1, day 2 and day 3. We all start to trade newly. Once the bell rings, you will start entering into the market, isn't it? We all start from the zero, and if you are making money or if you are managing your money well, it is up to how you are standing on the particular day. Read out or go through all these rules from the day 1 to day end. Manage your trades very well. It is the market itself that wields the scale of ultimate success. Just understand the fact that market can go anywhere in the direction. It does not care about you and me. It does not play favorites. It does not discriminate. It does not intentionally harm anyone or any individual. The market always right. If you must learn to respect the market will mercilessly punish you if you do not play by the rules whatever you have created. Learn to conduct yourself to play by these 25 rules and you will be rewarded. So by keeping an end note to this saying that read out all these rules every day before getting into the trades, and let us make our expenditure an investment. Let us grow together. This is Sinu Shivkumar from UI India Securities. Thank you so much.